I think good afternoon. Good afternoon. So I think so. I'm looking in the room and I'm like, I wanted to dress down so that I could fit in. So when I woke up in the morning, I had my tie on and my suit. Then when I looked at my diary, I realized I'm gonna meet techies, so I need to dress down. So this is my attempt of trying to dress down so that I can fit in. Um, Hopefully, I would pass. But also, I think it gives me an opportunity just to share with you the perspectives from a central bank perspective with regards to payments. Okay. So just to share with you the perspectives from a central bank point of view with regards to payments, our journey, how far we've gone, what do we see as our challenges, and what are we doing about, or what do we intend to do to address some of those challenges and some of the initiatives that we'll be undertaking to make sure that we have an ecosystem that works for everybody. So this is a regulator's lens to the payment space, and I'm happy to engage. So, see, how does it move? Green, okay. So I think the first slide is just context. I know the 2019 number, that's the official number from KNBS, but I hear people dropping 55 million, 52 million. It all depends on who you meet in terms of the population. But I think what sticks out is that 75% of our population is 35 years, and that's quite significant. It just talks to the kind of demographic that you will be dealing with when you come to Kenya. And that's extremely, extremely important. As you set out your business plans, as you look at who is it that you want to be able to serve, what do they do, I think that becomes a very, very key target. And you get to understand why as we go further down the slides. So, and this is, from our view, the drivers of change in terms of payments. We're looking at them from a context perspective, and asking ourselves, from a Kenya perspective, what is really driving the change in terms of what we are seeing in the payment space within the country? Definitely, a lot of it is customer preferences and what do customers want. And customers want instant, secure, interoperable, and affordable payments. And even as you innovate, I'm sure, and you talk to your customers more than we do, that's what they want. And for you to be relevant, then definitely your solutions and your services should be talking to that. From a regulator perspective, we are so focused around, and every time we look at solutions and we look at what is it that you have, either if you're a licensed or if you're a bank and you have a payment solution and we want to assess it, we ask ourselves, how does it serve the economy? For us, it's basically that Kenyan who is in Marsabit, or that Kenyan who's pulling a cart down the road or in a kiosk, does that solution or that product speak to them? And if it doesn't speak to them, then as regulators, then you have a problem with us. We will demand that whatever solution that you come with has to speak to that particular Kenyan. It has to be relevant to them, and it has to make sense to them. Definitely, system resilience and security is a focus for us, making sure that the platforms that you use are secure. With the advent of the new forms of technology, and that's something we are seeing, we're grappling with how then do we regulate big tech and the influence of big tech in the payment space. And, Apple Pay knocking on our door wanting to come to Kenya, Google Pay. What does that mean for us? And how then do they interact with us in our ecosystem, including the existing local players? How do we then create an ecosystem that works for them? So that governance is extremely important, and we look at that. The other key thing, definitely, and you are the providers of this service that I don't need to say much about, this is Increasingly, we are seeing fintechs in the form of PSPs, money remittance providers, and all that playing in this particular space of payments, away from the traditional banks. Definitely new technologies. The current buzzword is AI, and what AI is going to do, blah, 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 blah. And we hear a lot of that in the pitches we receive about the products you want to offer and the kind of solutions you want to offer. There's a lot of AI that is dropped after every 2 seconds or 2 sentences. And we are like, okay, so we are keen to understand that blockchain and DLT as a form of technology that you use to lay the infrastructure is also something that we see a lot in the applications and the people who come and pitch for solutions. Definitely big data and digital identity is one of those key things from a government perspective we are asking ourselves. Even as we lay a digital public infrastructure, digital identity is becoming a very key item that we are asking ourselves as a jurisdictions. Then how do we deploy a digital identity platform to allow us, for purposes of KYC and just validating issues around who is actually doing the transactions and creating the transparency that is needed in this particular space? How then do we develop that? And I think an initiative with various government agencies is in place to look at how then we deliver this, and increasingly you'll hear more about the issues of digital identity. Now, I think it's important for us to just appreciate where did we come from and what have we done so far. So our journey, if I look at it and the history of central bank, and this is information I got from my predecessors, our automation and modernization of our payments journey started almost 35 years ago. And it started with the ATMs. So we had 2 ATMs deployed along Moy Avenue by Standard Chartered. That was the first big thing that happened in our ecosystem. And I'm sure a lot of people were surprised, how could you get money out of a wall? And that now set the journey of how we have modernized and automated our payment ecosystem. Just looking at that, I think the next key milestone was in 1998. And in 1998, what happened? There was, for those who were around that time and who worked in the banking sector, there was the automation where we started automating our clearinghouse. There was the MICA code, magnetic ink character recognition, if you all remember. It was a code that allowed you to be able to read the check and also to be able to read, have a way in which, an automated way in which you'd capture the check inputs and also capture the security details on a check and be able to process. Then the clearing cycle, so there were 2 cycles. There was the up-country checks and local checks. The clearing cycles for checks was T plus 10. And for local checks, it was T plus 5. So we've made a significant transition from T plus 10. Right now, it's T plus 1. So a lot of things have happened to that. Then I think in 2003, I think there was a review of our Payments Act. That's when payments was actually mandated under central bank, gave central bank the powers to regulate and oversee payments. I think the amendment of Central Bank Act 41D that gave central bank the powers of overseeing and regulating payments. I think you come to 2007, the advent of mobile money, M-Pesa, I think was rolled out in 2007. And we've seen tremendous growth in mobile money. And the mobile money journey for Kenya kind of speaks for itself. But subsequent to the rollout of mobile money, because we didn't have regulations in place, the next thing was how then do we enact our first payment laws? And that was done in 2011 when the National Payment System Act came to play. And if you look at the act, a lot of it was kind of crafted around how do you regulate mobile money. And there are a lot of details around other forms of payments that was not envisaged then, that currently, if you look at the legal structure, you can clearly see some of those gaps which we are trying to address. Then definitely the regulations came in 2014, 2013, a very critical year, we did commence our first cross-border payment system within the region. That is IPS. IPS is a cross-border payment system where we have 5 countries currently integrated to that particular platform, allows us to be able to settle in our local currency. It's a large value gross payment system where we settle in our local currencies, accounts sitting in central banks, and transactions initiated on a real-time basis. I think among the first ones to actually deploy such a system in Africa. Increasingly over time, we've seen the increase of cross-border payment systems. There's REPS, there's Pan-African payment systems now coming up, and the talk of how that then rolls out. As a central bank actively involved in doing that. And the main reason for that is purely around then how do we provide the rails that will help us support trade within our jurisdictions. I think a couple of other things I can just brush through is mobile money interoperability. And a lot has happened to that. The journey started in 2018. Kenya as a country is very, very big in mobile money. Previously, you couldn't be able to send money across networks, and that has since been resolved. From merchant payments, that didn't happen. Now you can actually be able to do that. And a lot has happened through that journey. And I think we are at a point where we are asking ourselves, as much as we've achieved that, is that the best way we could have done it? And is there any other way we can achieve issues around interoperability? And further down the slides, you'll be able to see that. So last year, I think we did launch our QR standard. That was our last major initiative around just trying to develop and grow our payment space. Looking at the numbers, not done very well, but slowly picking up. It begs the question, what is the challenge? And I think working with the team that was involved in this, there are a couple of things we need to be able to address in terms of just even the publicity, but also the settlement to make sure it works for everybody. And those are some of the things we're trying to address. And we think that this would be a game changer if we got it right within our jurisdiction. I think the other key major thing that I can talk about along this particular journey that is going to happen this year is how we settle and clear our large value payments. So as a country, we are adapting the ISO 222 standards, mainly affecting financial institutions. So that initiative is ongoing for our wire transfers clearing through our large value payment system called KEPS. That transition is an industry-wide transition happening in April. So it's going to be a significant major change in terms of how payments move domestically, especially large value payments among financial institutions that are settled through the central bank. So how that changes is a major thing, and it's just in line with how we adapt to global standards. And the world is actually moving towards the ISO 222, and as a country, April is our month. So it's one of those things that we'll be doing this year as we work on that. In terms of the national payment system and how we are structured, just this kind of just gives you how we look at it from a country perspective. So we have the retail payment systems where we have mobile money, we have the clearing house that still does checks and EFTs. Definitely we have the cards, debit and credit cards, and we have the payment aggregators who are very active nowadays in terms of providing the last mile around merchant aggregation, but also the switches. So a lot of that serve our retail payment space. And on the large value, we still have our KEPS. Then we have our regional payment systems. And this is what we run as a kind of structure in terms of how we oversight. And there's a lot of detail, which I will not be able to unpack, and insights around the various aspects of this, which I will not be able to unpack for you today, but in another session, we can run to just give you a context as to, from the data we receive, what is happening in all these areas, and what do we see and where are the opportunities. In terms of licensing, so one of our roles is we license PSPs. Currently, we have 35 PSPs that are licensed in various categories. Some are electronic money issuers, wallet providers, payment gateways, and some provide various services across and the switches. It's our intention to continue to license because we believe that choice is extremely important. By licensing more PSPs, we're able to avail choice, and we're able to ensure that we have an ecosystem that promotes competition and innovation, and that can only happen if we have as many players as possible in our market. I think this is a very important slide, and just to show you the performance of the payment ecosystem and what we see. And for the innovators in the room, I think this is something you need to pay attention to. Because if you don't understand this, then it becomes very difficult to understand how our market structure is. So I said, in our retail payment space, 99.96 of all our total payment volumes, if we look at both retail and large value, because payments is mainly an activity, the volume of the payments is actually in the retail payment space, where 99.96 of the value of transactions, the volume of transactions is in the retail payment space. But if you come and look at the value, then the large value, which is the RTGS, does 55.45% of that. Now, of the retail payment space, 99.92 of that is mobile payments. So everything, so we are a mobile payments economy. So for you to be relevant, that's the space you need to be able to play in. Cards are at 2%, struggling with card acceptance, and the issues around card acceptance and why people are not using cards is something we need to be able to ask ourselves. Checks and EFTs still remain relevant. We still do around 2.54 trillion worth of clearing when it comes to checks on a monthly basis. So we still have dinosaurs among ourselves who are not moving to digital payments. And for purposes of financial inclusion, we have to take care of them. But we have also to find a way to encourage them to move and transition. And that just tells you, in terms of just the various payments instruments around usage, what we see and where the opportunities are. And just how our market structure is, especially with regards to payments and payment activity. I think the other key important thing for you to be able to note from where we see in terms of opportunities, where you need to play. Government is a critical player in payments in this particular jurisdiction. Yeah? So if you're not playing in the government payment space, then the opportunities for you to scale are also extremely limited. Yeah? 3.4 trillion worth of government payments going out. This is government payments going out. Government to pass on payments. There's also an increasing number we are seeing around person to government payments with the digitization of government services. And that's an opportunity for new players to play in. We are seeing that trend and volume and value increasing. And maybe next time we'll be able to report that for you to be able to see what we are seeing. And that is extremely important because it's a critical sector. The other thing is on the money remittance space, and that's very, very important. Diaspora receipts are very critical foreign exchange earner for the country. Last year, we did 4.1 billion. And this continues to increase. We project that this year, this will grow by 10%. Key barriers still remain cost and speed. Cost, the target is for us to get to 3%, but we see the average cost, as much as a lot of the money remittance will tell you that there are no fee platforms, averages around 8% for remittances that come in. A lot of that driven by the FX costs that are associated to that. And I think increasingly we are asking ourselves, how do we ensure that that cost comes down? And there's a lot of initiatives we are doing around this to be able, around access, around transparency, around speed, to be able to make sure that we continue to have that flow and that pipe coming in. But that's also a very critical space for the people in the room. So how do we move forward? So I think in 2022, we did launch our national payment strategy. And it talks about having a secure, fast, efficient, and a collaborative payment system that supports financial inclusion and innovations that benefit Kenya. And it's mainly anchored around those 5 principles. And this kind of lays the foundation as to what do we prioritize. And a lot of that, a lot of the initiatives that we do and how we assess people playing in the payment space is anchored around these principles. So if you have a solution, or if you are seeking a license, or if you have a product, how does it measure around those metrics that we've discussed? Innovation, choice, usefulness, and security. And arising from that, then we make a determination as to whether we should license you or we should license your product, et cetera, et cetera. But then the strategy, which is a 2022-2024 strategy, lays out some of the key initiatives that we'll be undertaking in the payment space as we go forward. Now, I think, what have we done well? And I think it's important to emphasize the journey we've come from and what are those things we've done extremely well. So I think when this journey started, there were 2 main objectives that the central bank had around the payment space. One was, how do we drive financial inclusion using digital payments? And the other thing is that, how then do we also promote the use and the deepening of digital payments? And looking at those 2 primary objectives, and from the lens at which we measure our progress, we've done extremely well when it comes to financial inclusion. From the last 2021 survey, we were at almost 84% of financial inclusion metric. That number mainly driven by mobile money and the access of mobile money. Almost 81% of that driven by mobile money. The focus now is shifting, and even as we look at this, towards access and the quality of financial inclusion. So what kind of quality of financial services do Kenyans access? And increasingly, we are asking ourselves, what is that quality of access? And also the usage of those financial services, insurance, credit, and for credit, is it affordable, et cetera, et cetera. So increasingly, our focus is around usage and the quality of access. But we've done very well when it comes to financial inclusion, and a lot of that has been driven by mobile money. I think the other key thing we've done very extremely well as a country is how digitized our economy is. So from a supply perspective, we measure the level of how digitized we are as an economy based on the amount of cash in circulation. So a lot of people in the room who are in payments, their main objective is, can we digitize cash? Yeah? And it's extremely important to do that. But if we look at where we are and compare to many other advanced and developed economies, Kenya is an extremely highly digitized economy. So if you look at cash in circulation as a percentage of GDP, that's at 2.4%. If you look at other economies that are similar to us in structure or even more developed, we are doing a lot better. Now, that number further comes down when we look at how much of that cash is outside the banks. Because cash in circulation also includes the money that is sitting in bank tills and bank vaults and all that. That number further goes down to 1.8%. So if you look at that in the context of cash in circulation as a percentage of GDP, so increasingly, the number of banknotes and whatever we are printing keeps on going down as our economy grows. And that tells you how digitized our economy is. So I think you're in the right space. The question is that how then do you keep money and how do you keep payments digitized? there's still an opportunity we see in that particular space, but these are things we've done very well in terms of promoting the use of digital payments in our economy. But there still are challenges that we see from a central bank perspective, and we think we can actually address them together. I think the first thing is clearly, because I'm the regulator, I'm allowed to use other people's logos without asking them, so, because they're all my licensees. We have limited shared infrastructure. And that creates a lot of inefficiency. I'm sure if you walk around, I think there are ATM booths, you'll find there are like 5 ATMs, 5 security officers manning those ATMs, etc., etc. So, I mean, we can do better. If you look at even just our agency infrastructure, there has to be a way in which we can share infrastructure to be able to deliver these services. And I think that is something we think there is opportunity for players like yourselves to be able to do. How do you collaborate? How do you talk together? How do you come up a way in which you can share infrastructure? Because that allows you to be able to deliver services to customers much better. I think the other key thing is just how our structure is. We see a lot of limited functional interoperability. Yes, we do have some form of interoperability. There's a way in which I can move money from my bank to my wallet, vice versa, across banks, etc. It does work, but the structure that supports it, I think, is highly inefficient because it's built on bilateral arrangements, and we think that there are significant opportunities for us to be able to address this, especially in the area of merchant interoperability and even just agent interoperability, for example. Significant opportunities that will change the landscape for the better. And this is an area we think that we have an opportunity to work on with yourselves to improve. I think the other key thing that I needed to share with you, I don't know why it's been blacked out there. I don't know, can someone remove that? Because this is extremely important. And it shows the context of the challenges that we face. And so, just next slide, please. No, it's next slide. No, it's the previous slide. So we've been trying to look at a typical Kenyan who's fully digitized and makes all their payments digitally. And most of you know a boda rider, a typical boda rider who makes a gross income of around 20,000 shillings. Yeah. If that Kenyan does all their transactions digitally, 2.5% of their gross income goes to transaction charges. This is extremely expensive. Yeah? If you lose 2.5% of your income on transaction charges, so you find that at the bottom of the most vulnerable people, or who earn less, the cheaper way out is to cash out. Cash still remains the most cheapest mode of payment. And why it remains the cheapest mode of payment is because of this. And this just gives you an example of, tracking an individual border person in this country who's decided to stick to digital payments end-to-end. 2.5% of their gross income goes to transaction charges. So you find that the most vulnerable of our society, or those ones who earn very little, then digital payments is not an option. So we need to be able to do something to address this challenge. And this challenge is manifested is manifested in this slide. So looking at the data, so we look at the data, and this is, if remember, mobile money is 99.98 of our digital payment ecosystem. So if you look at the cash in and cash out, yeah, in 2023, 2.5 trillion was cashed out at our mobile money agents. So if I'm gonna be paying 2.5% of my gross income as digital, as charges, what happens when I get money? The easiest way is to cash out, and then I transact in cash, because cash, not only is it cheaper, yes, some say there's transparency to it, it's anonymous. Nowadays, I can do my things quietly. But the most important driver is that it is too expensive. Yeah? So I think the question and the challenge of the people in the room is that how do we keep this 2.2 trillion within the digital ecosystem? Definitely, there's an element of velocity of money and how fast it circulates that builds that money out. But for every money I get, if it gets cashed out and it goes to the cash economy, then there is a problem. And that problem is mainly around the cost of digital payments. How do we address that cost? Yes, there are other considerations around privacy, and I don't need to know, nobody needs to know what I'm doing, but that becomes a key concern. And that just highlights what the solution, what the challenge still is for us to be able to address in terms of the element of digital payments. This is just another illustration of the challenge in a different way. So if I'm a small-time business person, yeah, and I make one bulk payment, it will cost me what? On average, if I make a 250,000 payment, one or three, it will cost me 300 shillings. So who moves that kind of money? It's definitely a well-off Kenyan. But if I was to pay my casual workers, yeah, and I was to do 143 bulk transactions of 500 shillings or of 3,000 shillings, the cost goes up to 8,000 shillings. Now, what happens then? Then what we see is that then using instant payment services that are digital in nature doesn't become an option. So if I have workers, I pay them via cash. Because if I'm a small business person, it just doesn't make sense to do bulk payments. And that's an opportunity for you people to be able to solve. But also increasingly, sorry, what we are seeing, and that's a big concern for us, that informs some of the policy decisions we'll be taking, that increasingly we still have a significant portion of our payments that are not instant in nature. Yeah? So you see checks, we still do around 14 million checks issued every year, around 2.5 trillion. Clearing time is T+1. Yeah? EFT transactions, T+1. Astonishingly, I think there's still room for us to be able to push our transactions, especially in the retail space, to instant transactions. And how do we do that? I think the answer lies with yourselves. I think from a policy perspective, this is something we are looking at very clearly and saying, is there an opportunity for us to be able to mandate instant payments up to a certain threshold within the retail space? Yeah? I always give an example where you see, and it happens a lot, where, so on Easter, is it Easter Thursday? That's when someone runs a payroll, okay, for your staff, or it's Christmas Eve, you tell your staff I've paid, but actually you've paid them via EFT. Yeah? So if let's say Christmas Eve is when? Is Wednesday, it means that salary will land in the account on Tuesday the next week. So what does that person do? I've told my children or my kids, we're going to go on a Christmas holiday. I'm going to be paid today. The finance guy says you're paid, but you have no money in your account. So what happens? I have to turn to a Shylock or a digital credit lender or whoever it is to borrow so that I can go for Christmas. And I think that's just not right. We need to find a way in which we can push, especially in the retail payments, up to a certain threshold, the need for us to have digital payments. I think in summary, what are the challenges we see? I think high cost of low value retail payments is still a problem, and there's an opportunity for us to play in this particular space. As we innovate, we believe that that will be able to push those costs down. The customer experience and the friction is also very high. Especially the challenge we see is on, especially around customer protection. For those who are Kenyans in the room, have you ever sent money to the wrong pay bill and tried to get a reverse? It's a nightmare. It's a nightmare. So how do we address the issues of customer experience? Because those are the things that push people back to manual payments. Issues to do with exclusion. How do we remove the barriers of entry, especially for small players, to be able to create a level playing field where they can be able to compete with established players, and just the level of service and innovation becomes the differentiator. And I think that's something we have to continue to do. And also from a regulator perspective, as we license and as the payment space evolves, how do we oversight that whole space to be able to make sure that we ensure the ecosystem remains secure for everybody? Increasingly, we see a lot of inadequate KYC and AML, CFT, preparedness, especially for new entrants, coupled with the constraints they face around just the whole governance structure. So these are the things we need to be able to work with them together to find a way in which we can improve. So I think that's basically it. If there are any questions, I'll be willing to take, and hopefully I can respond to them. Thank you. Sorry. You want us to sit?
Hello, hello. Okay, thank you. So we will have just a few minutes for a question, and then we'll open it up to the public. My name is Carmelle, Cadet, and I'll be asking a few questions from the director, and then we'll have the opportunity for the public to ask questions. Thank you so much for this presentation. I think you covered quite a bit around what Kenya has been experiencing when it comes to digital transformation. And the challenges, and thank you for being very open about that, as far as where the opportunity lies and what can be done by the regulator, but also the fintech ecosystem and the broader ecosystem per se. So maybe I'll just because we have just a few minutes, I'll jump into some questions I know are pressing to the broader ecosystem. There are quite a bit of innovation happening in finance these days. When it comes to blockchain, AI, we know that Central Bank of Kenya is working on virtual asset service provider bill. Can you give some context into what you're thinking when it comes to this innovation? What are the risks and what are the opportunities?
Thank you. I think from a central bank perspective, the principle that we adapt when we are looking at this is that we are technology neutral. The focus really for us has always been that what kind of problem are you solving? And technology is just an enabler. So whether it's blockchain or any other form of technology, is that have you addressed the primary fundamental risks associated with the product, but also with the technology itself? And we always say that the usefulness of the technology is assessed based on the problem it solves. It's not about the uniqueness of the technology itself. It's primarily about the problem it solves. And then if you're able to solve the problem, then you're relevant. But from a regulator perspective, then I think the risks still remain. One is, yes, there's a challenge in terms of understanding these new forms of technology, which we are investing in trying to understand what do they mean. We may not be at the same level as the innovators in the room, but we catch up very fast. So we are just literally a step behind. But I think critically, in terms of what we see increasingly as risks, and we mainly zone in into those risks, is things that we continuously look out. Customer protection, and how is that embedded in the solution you're providing. Cyber risks, how have you addressed that? Are there any weaknesses in cyber risk? Data privacy. So those still remain the fundamental principles in which we look at and assess the technology. And the primary focus is purely not on the technology, but on what is it servicing, or what is it doing?
Thank you. And one last question from me. You talked about the use of cash quite primarily, and the cash out dynamic that is still happening. Even with mobile money, people going either to the ATM or taking their money out of the system. Do you see opportunities around a digital cash, a version of a digital cash in this context? A lot of central banks are looking at, most central banks are looking at CBDC. What do you think about that?
So I think this is an area we still are exploring. I know we did issue a discussion paper and got views from the public with regards to whether the environment is ripe for us to have a CBDC. And based on the feedback that we received, it was not a priority item for central bank and for the public at the moment. Though even as we go through that journey, there's a lot of steps that we need to be able to undertake. One is really to understand what problem will it be solving. So you look at other jurisdictions, they're saying maybe they want to introduce it for financial inclusion purposes. That's not our challenge. Others say they want to do it for other reasons. So I think it's having the clarity as to what is the problem, but also ensuring that we have the right legal and regulatory framework in place to be able to support that deployment. And that's a journey, and we continue to explore and just look at what is happening globally, but also what are our needs as a country and whether this is relevant.
Thank you so much. Okay, so we have time for one question. Yes, go ahead.
Mr. Eganza, my name is April. I'm happy to hear that you said April is a good month for Kenya. My question is around, I know that the Central Bank of Kenya has been doing very well to ensure the hygiene of this sector. But this time when I come to ATS, I'm shocked. There are so many of Nigerian fintech companies presented here in Nairobi. So my question is, how do you see innovation versus protecting, the hygiene of the industry? What kind of environment do we have in Kenya to attract innovators or investors to come to Kenya?
Maybe another question, then I can take both.
Thank you for that presentation. My name is Brian. I represent one of your future licensees. So very soon you'll be using my logo without permission. Yeah, so my question is just around licensing. So it's two parts. So one, what are some of the things that the central bank is doing to sort of reduce that licensing period? Because in a case, for example, the duration between getting that acknowledgement letter is about 8 months now, and still no movement. So what are some of the things that the central bank is doing to try and reduce that window? Because 8 months is enough for these small companies to close shop. So another question around the same is in other jurisdictions where we're also seeking licenses, say Ghana and Uganda. So the central bank in those countries provide sort of a sandbox where these innovations can happen within like a controlled and monitored space, which enables the central bank to execute its mandate, at the same time also allows these fintechs to sort of get ahead in their licensing journey. So what are some of the considerations in terms of that sandbox for the Kenyan Central Bank?
So I think I'll start with the easy one. In terms of the licensing, so licensing varies. So it's not a standard, what do I say? One applicant's request is very different from another applicant's request. So it's very hard to generalize the way you're generalizing 8 months. So I can only respond based on a specific case, because from the data I have, there are those ones that progress very fast, there are those ones that take time, and the main reason why they take time is purely, a lot of it is also around the quality and the quantity of documentation that is required. And I was sharing this earlier. So the way our licensing framework is that it doesn't kind of segregate a new startup from an established firm. So in terms of standards and what one needs to be able to meet, it's quite onerous in terms of the requirements. So you find that in some instances it becomes extremely onerous for new players to be able to meet. And that's typically, from a central bank's perspective, if one particular document is missing, we don't progress. And I've seen a lot of back and forth, and some of them end up lasting 2 years because we are seeking compliance to those particular requirements. Because the law as structured right now does not provide any rooms for no objection or concession. You have to meet the requirements for you to be able to move to the next stage. I think what is fair is that how do applicants get to know and have visibility as to where the status of their application? And that's an initiative we are trying to do to see how we can automate the whole licensing process to be able to give applicants the visibility to know the status of their application, but also to as much as possible, digitize the submission of the documents. We almost we call it a wheelbarrow of files that usually comes in with an application. Just reviewing that file page to page is also quite tedious, but I think we have an initiative that we've started to see how we can digitize that process. That allows us to be able, for all applicants to have visibility as to where their application status is, but also it enables us to be able to introduce the necessary efficiencies needed to be able to do that. I think on the issue of sandbox, so at the moment we've started a process of reviewing our legal and regulatory framework. With the existing framework, it did not provide for a regulatory sandbox. And in the process of reviewing the legal and regulatory framework, we're trying to see how then do we anchor a regulatory sandbox within the framework, and how then do we also build guidelines that will allow that to happen. So I am positive that we are moving in that direction. It may take some time, but as soon as we review the framework, then we'll definitely anchor it in our regulatory framework, but also provide clear guidelines into how then we run and operate a regulatory sandbox. I think the issue of April's question, it's a chicken and egg question. So I would probably want to hear from the fintechs in the room as to what is their experience. I think from a regulator perspective, we feel that the rules that we have are standard rules for everybody. And we don't decide who is an actor in this space and who is not. The rules are clear as to, especially if you're seeking a digital finance service license that is issued by the central bank, whether it's a DCP or MRP or a payment service provider. The regulations stipulate what you need to be able to meet. And everybody is allowed to be able to play in that particular space. I don't see the regulator being an inhibitor in this particular space. I think the question that ties to, I think the other question is that how then do we make that process as efficient as possible so that then the turnaround time is faster, but that is also on a case-by-case basis. As I said, each application is totally different from another. So, and you have to assess it on its own merit. So I think that's what we need to be able to do, just to be able to bridge the gap and make sure that we continuously have more players playing in this particular space that are also regulated, because the importance of regulation is that then we are able to know and have sight of who's acting. We're able to ensure that the public is protected, but also it just have the necessary and the right safeguards to ensure that the services or the solutions that are being deployed meet certain minimum standards.
Well, thank you so much for the. There's one more?
One more.
Okay.
Good afternoon, guys. Good to see that there's a lot of other future licensees in the room. So hopefully next year our logo will be up there as well. My name is Tanya. First off, thank you so much, Mr. Eganza, for a very insightful presentation. I think my colleague and I were very impressed with the candidness and how open the data and the statistics were. My question is around the cost of the transactions that you mentioned and how that is such a big driver in terms of cash out. So we're looking at around over 2 trillion Kenya shillings coming out of the ecosystem because of the cost of that. Given that 99.9% of our transactions within the ecosystem are mobile money driven, to what extent are you actually engaging the actors in the mobile money space to actually reduce those costs, to make it more beneficial, and to actually encourage the money to stay within the ecosystem as opposed to being cashed out?
So I think that it's two actors. So while it's a problem, I think the only interventions we can do from a regulatory perspective, because we don't mandate price and we don't prescribe what the price is. Yes, it has to be affordable, and there are some principles in which we assess and approve the prices, the pricing principles, where it has to be affordable, equitable, etc., etc. I think the key thing, and from where we sit, the key interventions is that how do we, and it ties back, how do we ensure that we remove the barriers to entry to allow as many players as possible? Because we believe if we're able to foster competition, then that's the only way we can actually be able to drive the cost down. So looking at, do we need to license more? Over the last 1 year or so, we've licensed 20 new PSPs. Since central bank started. So we're trying to get in new players in the space, because we believe that with new players and innovation, that will be able to foster an environment that promotes competition. And with that, then somehow along the line, prices should be able to come down, and hopefully they will. But also conscious, and we have these conversations with the players, especially every time there are requests to review the pricing structures. Many a times, 10 out of 9 we decline because there's the need for us to be able to keep the costs affordable.
Okay. Last one.
Oh, thank you. Thank you. My name is Kevin, and I head up Vato, which is a cross-border payments platform. When you speak about competition, would there be an opportunity for non-bank payment providers to participate in the CAP system so that we are able to, for example, compete with banks via settlement on RTGS? The second part of my question is, we do try to implement the East African payment system for cross-border payments into the region, but we seem to have a lot of challenges with our, can I say, counterpart banks in the rest of East Africa because they don't seem to have a lot of uptake using that system. We see a lot of cross-border payments and significantly cheaper to make payments into the rest of East African region. What are your comments on that? And looking forward to engaging. Thank you.
So I think one of the key policy initiatives we're undertaking under our RTGS modernization journey is to do two things. One is to increase access. So there's a whole pillar around access to RTGS and access to the national payment system. Under that pillar, there are two initiatives that we're actually driving. One is how do we progressively move access of CAPS or RTGS to a 24/7 kind of clearing and settlement. While it's going to be a progressive journey, because also we want to see whether there's really use for it. There's no point of me keeping the system 24/7 and between 8 and 6 in the morning I have 2 transactions. it has to be able to make sense. And there has to be, a use case for that. But progressively, I think the first step we're exploring is that how do we, for instance, start 7 to 7, and then maybe, open it up over the weekends, eventually as we progress towards 24/7. And that's something we should be doing very soon. On the issue of access, also, we look at how then do we also provide non-bank players access to CAPS for purposes of clearing and settling. So we are doing some work around that to understand the framework that we need to be able to put in place, primarily to address a couple of things that we need to have clarity on. One is what are some of the safeguards we need to put in place to avoid failure to settle risks for non-bank players. For the banks, they have reserve accounts at central bank, and there's certain minimum requirements that they need to be able to meet. All that goes into ensuring that the failure to settle risks within CAPS environment are extremely minimized. So if we were to bring in non-bank actors, so what kind of regulations, or not even regulations, what kind of framework do we need to be able to put in place to ensure that such kind of exposures are addressed? But I think increasingly, as you say, there's need for us to be able to allow non-bank players. It is a global trend. We're seeing it in many other jurisdictions. There's opportunity for us to learn how they've done it, but also deploy the same here. And I can assure you, within the next couple of months or so, you'll see a lot of activity towards that direction. I think when it comes to IPS, from where I sit, from a cross-border payment system, so I always say that we have an infrastructure that works. The system and the infrastructure from a clearing and settlement perspective works. But the challenge I've seen is that, so a lot of it is that I use the analogy, so the whole thing is an 18-ton wheeler carrying a matchbox. So the activity through IPS is very few. In fact, a lot of the activity in IPS is between Kenya and Uganda, very few between Kenya and Tanzania, but the rest of the actors are pretty kind of dormant. And the main issue rests on two things. One is trade. What are the barriers to trade? Because you have to be able to address what I call, it's not a payments issue. It's a bigger macro issue that relates to trade. And that becomes a whole huge conversation of, are there trade barriers? What is our tax? Am I allowed to make? From a rails perspective, the rails are there and the rails are working. But if the trade is not happening, then there's a bigger problem. And what is causing that problem? Are they tariff barriers? I don't know. So it's never a payments issue. When you critically look at it from a rails perspective, there are other bigger issues. Issues to do with another very common issues with currency convertibility. And how then do we price on a cross-border perspective? What effects do you use and how do you price that? It becomes such a complex issue, especially if you're in a region, for example, where some operate a free-floating FX exchange regime and others is fixed. So all those dynamics play a role, and we see less and less activity. But I think increasingly we're asking ourselves, as you do, what do we need to be able to do? And we realize that from a publicity perspective, people, for example, don't even know, and maybe even financial institutions don't publicize IPS, for example. So IPS is kind of placed behind there. They still prefer using their correspondent banking arrangements for settlement rather than IPS. And all those, are things that we need to be able to address. There are various interventions that need to happen, but not only from a regulator perspective, but from also the banks and the financial institutions perspective to be able to promote the usage of this cross-border rail.
Okay, well, thank you so much. I think I'll capture the last moment that I think is very telling and forward-thinking as far as giving fintechs and non-banks access to central bank systems. I think that's going to be a critical piece that can lower costs, and we're seeing many central banks looking at that as well. So, Director, thank you very much for the opportunity, and thank you for joining us. And we'll take a picture together. Thank you, everyone, for joining.